Hi everyone, welcome to StunnerShare. So today we are going to see a particular specific topic of indicator that is called as moving average. So all these times we were focusing mostly on the pivot boss indicator and pivot boss concepts only. But I felt that okay, moving average also can be used in a better way. So if at all I share some of the secrets out of it, then I think people can make use of that as well. Because I see a lot of posts asking for, can you please share a swing trading indicator or swing concept and all those. Maybe this concept, whatever which I'm going to share in this particular video, can be useful for swing as well as for intraday. It is not that you have to use only for intraday or only for swing. You can use it for any specific time frame. How you are going to make use of it or how well you are using this indicator, that actually matters a lot. So without wasting the time, come let's move on to this video further. So these are the topics which we are going to cover. Introduction of moving average, types of moving average, application of moving average, trading system based on moving average, crossover system based on moving average. So this is all what we are going to cover in this particular video. Don't expect a more detailed explanation of what is moving average, how it is calculated. No, that is not shared in this particular content. Here I will be giving you a basic information of how the moving average can be used for trading purpose. So that is what the whole plan of it. So come, let's move on to the video further. If at all, if you are not sure what is a moving average and all those, if you are a very beginner in stock market trading, then I would tell you that go to the moving average, like Google it and then read about it and then come back. And also please note, this is not going to be a basic content. Maybe this is not available in Google also. I'm not exactly sure. This is some of the strategy which I have derived and I have learned from a lot of other handles as well. It is not something that I invented it. I understood that many people are using moving average in a different way. So what I decided is that I just combined their studies and grouped their studies and then tried to form a setup, and that is how this particular crossover system or moving average setup has been identified. So come, let's move on to this video further. So introduction of moving average. Basically, what is a moving average? See, average, what is an average? If say for example, if you wanted to know an average of your class strength, assume you are in a school or college or whatever. So you go into an institute or somewhere and you see your class strength is around 20 people and you wanted to know about the average age of all 20 people over there, then you have to calculate each and everyone's age, ask each and everyone's age and sum the 20 people's age and divide it by 20, and that will give you the overall average of the age of the people. If say for example marks or height or weight, any average, it's like total it and then divide by the number of count you are doing it. So that is how the moving average is calculated. Similar way, a moving average is calculated in a way that how the candles are moving. Say for example, you are going to use like say for example, you are going to use 1 2 3 4 5 6 7 8 9 10. So this 10 candles average if you wanted to use, and that is called as the moving average. So basically you have a moving average plotted here and you have different types of moving average, SMA, EMA and WMA. And now say for example, I wanted to know the 10 candles moving average. So what I will do is like I will select 10. If I wanted to know the 20 candles moving average, then I will calculate for 20. Same way for 50, same way for 100 and 200. So this is how the moving average is. So what is a moving average? So basically you need to understand that moving average is basically called as MA. It's a stock market indicator used for technical analysis. So what is technical analysis? Technical analysis is reading the chart patterns or like chart price action to understand or to know what would be the predicted or the future perspective of candlestick movement. Okay, and in which way the moving average helps? In moving average helps you to identify the price data over a specific period of time. Assume you are using it in a 5 minutes, then it calculates a 5 minutes the average price. If you're using in 1 hour, it calculates a 1 hour's average price. So that is how, based on the time frame, the moving average changes. Okay, moving average also helps you to identify the direction of the trend. Say for example, there are different types of moving average. Say for example, simple moving average, exponential moving average, and there are different values of moving average. Say in the case of if you are using a 20 moving average, then that means 20 days average is calculated. If you're using a 200 days moving average, that means 200 days average is calculated. And same with 50 moving average, some uses 9 moving average, 10 moving average. So all these can be used as per each and everyone's understanding. And also moving average is a lagging indicator. You are following the trend using the lagging indicator moving average. That will help you where the price can ideally come. Say for example, you are going to use 20 moving average. 20 moving average, yes, it has a it is a lagging indicator, but it will tell you the overall market is bullish or not. If the price stays about 20 moving average, that shows the market is in a bullish momentum. If the price is staying above the 200 moving average, that means the price is bullish for a longer term. See, if 200 days average, which is almost like 1 year's average, there are 365 days in a year, and in that 365 days, 52 days are Saturdays, 52 days are Sundays. So almost 104 days are subtracted. So nearly we have 250 plus days in market. In that 10 to 15 days, we would actually go for what is it called as the other leaves and all those. So approximately we will have 230 to 240 days of trading days. Based on that only we are calculating the 200 moving average, and that will tell you the overall 1 year's picture of how the market has behaved. So though it is a lagging indicator, this indicator can be used as a trend following indicator. So you wanted to know whether the momentum of the market or the any stock is going to be bullish, bearish, or like what is expected, then you can make use of this lagging indicator, which is called as moving average, which will help you to identify the trend of the market. Here, now going further, we will also discuss on types of moving average. What are the different types of moving average we have? So there are many types. I am going to cover only on simple moving average and exponential moving average. So which is called as SMA and EMA. What is a simple moving average? Simple moving average is a simple average of price movement over time. It is just going to calculate the candle's price based on the time specific which you are choosing. Say for example, you are going to use 5 minutes, 20 moving average, then 25 minutes candles average will be considered. If you are using 1 hour time frame and 200 moving average, that means 200 1 hours candles average will be considered. So it is based on simple average of price over time. What is an exponential moving average? Exponential moving average gives greater weight to most recent price action. So to discuss more on the exponential moving average, see, basically there will be one question to everyone. Like you told about simple moving average, but we did not understand about exponential moving average. And that is why I included this particular screenshot, but I have not included in the presentation whatever I have. Because see, you don't need to know the formulas. It is all predefined. You have the indicators available in TradingView. You can make use of this exponential moving average formula itself. But there is slight difference between exponential moving average and simple moving average. If you wanted to debug, if you wanted to dig in more and understand the basic difference, then you have to read this. Okay, you have some separate formula for that, and then based on the formula only it gets calculated, and all those things are there. But I don't want to go deep dive into it and then confuse myself. To me, exponential moving average is very good for limited period of time or for a smaller time frame, and simple moving average is actually good for a very longer time. So this is how you have to use it. But the concept, whatever I'm going to discuss in this topic, is completely different. So let's not confuse with exponential moving average and simple moving average. Simple terms, SMA can be used, EMA can be used. How you are going to use that actually matters. So each trader must decide which moving average is better for his or her particular strategy. So you have to decide which one looks good. For me, I am using 9 exponential moving average, 9 EMA. So that is as per my comfort zone. And also one more thing to highlight to you is that if you go inside any particular indicator, you will have high, low, close, average, all these things are there if you are going into an moving average. Let me show you that as well. So now I'm into a moving average. So if you go here, there is a source which says close, high, low, open, all these are there. So you can decide the moving average based on that source also. What is the source actually tells? Here I said simple moving average calculates based on the price movement. So 5 minutes candles has high, low, open, close. So which one you are going to choose? Which is the source? You are going to calculate the open 5-minute candles. If 10 5-minute candles open, you are going to choose, or close you are going to choose, or high you are going to choose, or low you are going to choose, or midpoint you are going to choose. That all depends on the source which you are going to decide. See, if that's what this is small information about the SMA and EMA. If you want to deep dive in, then you have to do a lot of research in that, and all small hints I'm giving you. If at all, if you wanted to explore more, you can Google it. You will be able to get a lot of information. Now we are going to see application of moving average. How are we going to apply this moving average in trading, and how are we going to get benefited out of it? So moving average can be used for buying and selling. Okay, no matter whether you are going to do for buying opportunity or a selling opportunity, moving average can be used. So if you wanted to go for buy side, you need to ensure the price is trading above the moving average. If you wanted to go for the sell side, you have to ensure that the price trades below the moving average. So you have to ensure this is followed. These are very basic information. I know most of the people are well aware of this. Now, SMA and EMA, some basic differentiation. Many shorter term traders use EMA. Okay, exponential moving average only they use because they want to be alerted as soon as the price is moving the other way. See, I am using 9 moving average, but if you honestly say, how am I using it? Not effectively or efficiently, because I am more towards price volume player, or I am more towards pivots player. Sometimes I use 9 EMA just to know whether a price will come or pull back at this zone or not. So that is why, but not much of a moving average player I am. But sometimes some trades I still take, and that has actually benefited for me. And now coming to the SMA, simple moving average, long-term traders trend to rely on SMAs since these investors aren't in rush to act and prefer to be less likely actively engaged in their trades. This is true. I am using SMA for long term. I just wanted to understand whether market is respecting 20 moving average, 50 moving average or not. 200 moving average will be touched or will be tested when there is a huge crash in the market. Apart from that, those times, 20 moving average and 50 moving average, I do in all my swing trading analysis, irrespective of whether I do price volume analysis, irrespective of whether I check pivots, I always check moving averages. Even if you guys see the weekly analysis video, I go from monthly, weekly, daily, hourly time frame. In all those, I will be checking moving average as well. So I use simple moving average for a longer term trading perspective. Now going further. So now whatever may be the indicator you are using, moving average, SMA, EMA, WMA, pivots, RSI, volume, Camarella, CPR, whatever you use, it all based on your preference, personal preference. Okay, it should not be like, okay, I have told you have to follow it. No, even though I have told, even though I learned a lot of moving average related content, I am using a different concept which many would have not used, or if many people would have used and it would not have popularized. They are still using that, and they are not educating to others because it is giving good results and they don't want to tell it to others. See, any classes, online classes you go, any offline classes you go, whatever they teach, if it is working well for them, why do they want to teach for you? Simple concept, right? If it is working well for them, why do they want to teach for you? Now again, whatever I'm telling to you is, any particular strategy you are using, it is based on your personal preference, how it is actually working for you. Okay. To know more, it is better you plot EMA and SMA on a particular chart and you see how the results are coming in and how better your trading is becoming. And based on that, you will be able to understand which actually suits you. Now let's go based on trading based on moving average. Okay, there are two strategies which actually I'm following. Okay, one, price crossover. That means there is one moving average. What if the price crossed above that moving average? What will I do? What if the price crossed below the moving average? What will I do? So this is one particular strategy. This strategy I will give it for public. And second strategy is called as moving average crossover. I'm using 3 different moving averages of 3 different values. I'm going to use the moving average. Based on that, if the moving average is crossing over the other moving average, how will I trade accordingly? How will I exit accordingly? How will I pyramid accordingly? That is covered as moving average crossover. That will be only for members. Okay, so let us move further. Now price crossover. Simplest moving average strategy. This is available in all Google, all YouTube channel, everywhere. Even whosoever comes to trading, stock market trading, first they undergo or learn this moving average concept only, and then only they will come back. So simple is, whenever the price goes above the moving average, you are going to buy. Whenever the price crosses below the moving average, you are going to sell. This is what the simple price crossover strategy. So here the price closed below the moving average, so you are selling. Here the price closed above the moving average, so you are buying. again selling because the price closed below, again buying when the price closed above. So this is the very simple moving average. Here I have shown you the Nifty 50 chart using 30 minutes time frame. Okay, same thing you can use in 15 minutes time frame. Bitcoin, I'm buying once the price is crossed above the 20 moving average, selling once the price closed below the selling moving average, and then buying once the price crossed above the 20 moving average, selling when the price crossed below the 20 moving average. Okay, and this is in Bitcoin 15 minute chart. So what am I trying to say here is, doesn't matter whether it is 30 minute chart, 15 minute chart, daily chart, any time frame chart, price crossover works in all time frame. Basically, any moving average, any strategy, price crossover or moving average crossover, it actually works in all specific time frame. Clear? Now, let me go to the moving average crossover. Okay, so here I'm going to use two things. So I'm going to use three moving averages here: short period moving average and long period moving average. Whenever a short period moving average crosses above the long period moving average, then I will go long, which means I will buy it. Whenever the short period moving average crosses below the long period moving average, I will go for sell. So basic understanding or basic example or basic thought process here is, whenever 20 moving average crosses 50 moving average, goes up, then I will buy. Whenever 20 moving average crosses below 50 moving average, I will sell. So that is what the basic understanding of what is moving average crossover. And don't think that I'm using the same 20 and 50 moving average. That is a completely different concept. Now, what is the concept which I'm going to use? See, here I'm going to use 3 exponential moving average in this particular moving average crossover. Okay. So many people think that moving average is not going to work, or moving average does not work effectively and all those, but it's not the same. If you're able to identify the trend, if you're able to understand the support and resistance activity, you can easily use moving average and make use of it. So let us see how this moving average crossover strategy works. Okay, so come, let's move on to this video. Here I'm using 3 exponential moving average. Please note, this strategy works awesome in trending market. Maybe we will do a small back testing also. Now, what is the setup? You have to choose 3 moving averages. One is EMA 50 high price, EMA 15 close price, EMA 50 low price. So what does that mean here is, if you go over here, choose a particular moving average, and in this moving average inputs, I am giving short 15, that is EMA 15 to close price. I'm changing the source to close. And then 50 I'm making it to source as low, another 50 I'm making the source as high. That means 15 EMA moving average is plotted based on 15 candles close price. 50 EMA is plotted based on 50 candles low price. 50 EMA is plotted based on 50 candles high price. If at all you wanted to see, this is how the chart will look. Okay, black is nothing but 15 moving average based on close, and then what we have is, okay, and then we have red, which is based on 50 EMA based on high, and this purple is based on 50 EMA based on low. So that is how we have to apply that screen indicator. This indicator, I found it very difficult. Maybe you can search with DEMA, you can get it, and then you can accordingly change the prices and see. So now, what is the strategy you have to use? Simple. Whenever 15 EMA, this one, 15 EMA is this one, okay, this black one, crosses above all the moving average of 50, you buy it. Okay, so assume, let me go into any possible trade here. Okay, now 50 is crossed above all the moving average here, correct? Here you see a crossover. Okay, maybe here or here, let's assume here. So I will buy above here, and my stop loss will be swing low. Okay, so buy as soon as the condition is met. Place your stop loss just below the recent swing low. Take the profits when the 15 EMA falls to touch the 50 EMA, reaches first trouble area like facing resistance. From strong resistance zone or any reversal conditions like pin bar formation, bearish candlesticks clue. One can also look for pyramiding opportunity when the stock comes near 15 EMA and price does not sustain below the 50 EMA. Any time frame you can use. You can also use intraday strategy also, like 5 minutes, 15 minutes also it works. So here Reliance daily chart, if you see, the price crossed above this point on November 2023. If you have bought at this candle's high and placed the stop loss at this swing low, from here of 2350, it actually went good near 2665 till the chart whatever it shows. So nearly you would have got that 300 points, which is almost like 15% move you have got. Okay, and then next it is working on gold also in 4 hours time frame. I am buying once the crossover has happened and I have placed the stop loss at the swing low and it has actually gone good. From here to 2310 or 320, it has actually gone till 2380, and still what is the exit criteria which has been told here? The exit criteria is take profits when the 15 EMA falls to touch the 50 EMA. So here, no matter whether the price has come down, the 15 EMA, but the 15 EMA does not touch the 50 EMA. Until and unless 15 EMA is not touched, you can still grow. So from 2325, it has actually gone to 2425, $100 we can see. And now moving average crossover for sell side also it works good. Same way, when the 15 EMA crosses below that 50 EMA, then you can sell it and same exit criteria can be considered. See, from here the natural gas actually crossed below here. So you are selling at this point. So $1.90 or $1.880. From here it has actually come till this zone where you can take your profit, which is around 1.720. So nearly $0.2 you would have got at this place. Okay, and same way entry and exit, when the short term moving average turns greater than long term moving average, you are entering. When the short term moving average turns lesser than long term moving average, you are exiting. Same way, say for example, here I have bought. Okay, I have bought at this place and I placed my stop loss here. When should I exit? When this black line crosses below these two, then I have to exit. Okay, so going here I am exiting. So from here I have got $100, which is actually given $125, but here I'm getting approximately $90. And there is a concept called pyramiding. Say for example, here the price went till 50 EMA, but the 15 EMA did not cross below the 50 EMA. So if at all you wanted to pyramid, then when there is a close above 15 EMA, again you can buy some. Okay, and again if you see the price coming above, and here if you want you can buy some, and again when it is coming down, here you can exit. So that means you are buying at 3 places and you are selling at 1 places. Same way, let us see for sell. So sell, what is the criteria? When the short term moving average turns lesser than long term moving average, you are going to buy, sell it, and you are going to close the position when the short term moving average turns greater than long term moving average. Let's forget about what I wanted to show for sell, but let's assume come over here. Here we have bought it, our stop loss placed, here I'm exiting. Now here you can sell also because 15 EMA has crossed below the 50 EMA. So you can sell here. And from 2,400, it has still gone till 2,326 at this low, which is almost like $70.70 we have got. And again, the candles went towards 50 EMA, but again gave a close below the 15 EMA. Again, you can pyramid here, and again it is still going down. And the same only I have applied in natural gas also. Here I am selling it. Okay, this here I see the 15 moving average has crossed above the 15 EMA has crossed above the 50 EMA, so I am exiting my position here. Okay, same way, if at all you wanted to buy, you can buy over here, or if you see there is a gap up and you wanted to come down to buy, you can buy at these positions also. So it is all how you want to decide. Also, please note, this works well in trending market, so you have to make use of it how you wanted to go for buy and sell. So conclusion, if in the above setup, whatever I have discussed, price crossover or moving average crossover, try to mix candlestick pattern, support and resistance, so that you will be able to avoid all the false signals in this particular strategy. Clear? So this is what I wanted to tell to each and everyone. I hope I have given some useful content in this video. If you feel the content is good, kindly give a like, share and subscribe, and also please share your feedback in the comment section. And also if someone wants to backtest it and tell me, that is also very well good. So it's up to you guys to decide which one you guys wanted to follow. And thanks a lot. Stay tuned for more useful content. Thank you.